The chip wars are intensifying while NVIDIA remains the dominant force in semiconductors. Competitors are stepping up. Intel's Lunar Lake claims a 40% reduction in power consumption, while AMD's MI350 boasts a 35-time performance boost. But can these challenges actually close the gap on NVIDIA? Our experts weigh in.
Keeping close tabs on this one as well. Applied Materials forecasting a weaker than expected second quarter revenue. The chip manufacturing equipment maker citing the threat of tighter U.S. restrictions on exports to China. Now, the company says export controls that were put in place during the final months of the Biden administration will result in a $400 million hit to fiscal 2025 revenue. Shares right now of Applied Materials are down pre-market by about 5%.
Yeah, it's really interesting to watch a company like this because they're a key supplier for companies like TSMC, Samsung, Intel. They use tools from AMAT to manufacture their own chips. They're also heavily tied to the overall semiconductor industry and global supply chains on semiconductors, something that came up on the call, export regulations as a potential headwind. I think it's just really important to take a look at AMAT because it is indicative of the fact that the chip sector has been significantly under pressure, and we're seeing the cycle in the chip sector evolving, and it's evolving in a direction that may be negative. Having said that, JP Morgan talking about how, yes, AMAT coming in modestly below expectations, particularly due to spending declines in China, which with tariffs coming in, that's only going to continue. But the company did report solid results, and its outlook does reflect the company moving away from China revenue and strong earnings power. So there also are some bullish calls still and reactions from analysts to this earnings print, but as you can see, the stock down nearly 5% ahead of the market open here. First up, Brad, we want to talk about Intel pulling back from its recent rally. The stock getting a boost earlier this week after Vice President J.D. Vance said domestic chip production is important to the Trump administration. But it is interesting, Intel still on track for one of its best weeks since the 80s. And that comes in the context, of course, as you can even see here on your screen, over the last 5 days, but much more broadly, if we can broaden that out, Intel has been under a lot of pressure just because of the transition to chips producers outside of the U.S. and, of course, NVIDIA, a huge beneficiary of that.
Yeah, domestic, internationally partnered chip production, though, is the reality of what we could see for Intel here, and specifically calling out from Citi their own evaluation of a potential foundry partnership that would potentially go forward between Taiwan Semiconductor and Intel. That surfaced, Citi ultimately kind of dissecting this, basically looking at three core reasons that this might not work out, or at least why it may fizzle here. One of them being staff members following commands of Taiwan Semiconductor. Additionally, the organizations and their production process ecosystems, which would require some major adjustments as well. And then additionally, finally here, the work culture variation. Intel staff members essentially kind of working under some of the same circumstances that the Taiwanese semiconductor employees are held to. And so those three things considered, reasons why Citi is kind of pushing back on this partnership, at least in the interim period of time. But for investors that have been watching Intel, no doubt hoping that they continue to catch a bid, at least in positive sentiment from the new administration, because the larger hang-up was the billions of dollars that were earmarked for chip production in the U.S., that there was a larger question mark as to the disbursement and the time scale for that disbursement once you change the guards in Washington, D.C., regardless of whether or not the PC demand cycle and the worst of that is behind us, which is what we had been really monitoring towards the third, fourth quarter of 2024.
It's so hard to look at the totality of the data coming in and the policy implications when you've got things like export controls, but then you also have tariffs that would be a negative indicator for names outside the U.S. Is that a lift for a name like Intel? If you look at today's trade, not necessarily so, as the street kind of looks past the potential of those tariffs amid negotiation.
Shares of ARM Holdings rising as the company reportedly secures Meta as the first customer for its own chip. That's according to the Financial Times. Yahoo Finance's Dan Halley joins us now with more. Now, Dan, we should probably make clear to viewers, right? While we sort of refer to many of these companies as chip makers, ARM is more accurately a chip designer.
Yeah.
Normally, I guess until now.
Yeah, you would consider, so chip, I guess chip maker is hard because they're not physically making the chips.
Right.
So it's like, I guess designer is more like accurate, whereas ARM isn't necessarily designing whole chips. They're designing different instruction sets for chips that can then be customized by these other companies, the Apples, the Nvidias, and whatnot, when it comes to their CPU in Nvidia's case. And so now they're actually going to be designing their own full CPU, so an actual full-on chip. And this is a big deal because Intel is the CPU company, and there's a reason why Intel's still doing its thing to a degree, whether well or bad, it depends on how you look at it. It's bad. But the thing that matters here is that Meta wants to use these ARM chips reportedly, this is by the Financial Times saying, in their data centers. And so that's a huge deal for Intel. Their chips are usually found in data centers. If you have an NVIDIA card or a server in your data center, 9 times out of 10, there's also going to be some Intel chips in there somewhere if you're not using the actual Grace chips that NVIDIA makes. So this is a huge problem potentially for Intel if ARM can go ahead and prove that their CPUs are powerful enough and efficient enough when it comes to performance. Because the big deal here that when you think of a company like Meta, they're using a lot of GPUs. Those absolutely hoover up electricity. Cooling them off is a big deal. So they're really just blasting through power. If they can find efficiencies anywhere, that's a boon to them. And if they can use an ARM chip, which are known for their efficiencies, then that could be a big, big deal for Meta when it comes to total cost of ownership of these huge data servers.
So what's interesting, Dan, in part what you're saying here too, is ARM now potentially comes into competition with some of its own customers.
But it's literally its own customers. I mean, look at, if you look at Apple, they're built on ARM chips. If you look at a number of these companies that use CPUs that are based on ARM technology. Qualcomm is one of the largest. They use ARM technologies. And so, if they're getting into the CPU space, that then becomes a problem for their own customers. I think it's important to point out that with the Meta distinction is, again, the data center. So it's not necessarily a problem for, Qualcomm there, really. Apple, obviously, they have their own data centers that they're reportedly working on using their ARM-based chips in, but that's going to be an Apple-specific kind of thing. It's not going to be a broader data center push. But when you look at something like an Intel and AMD, which is also in the data center space, not to leave them out, that's where I think the real problem is. And again, it comes down to the potential for that efficiency, because all we're talking about, I mean, they're building nuclear power plants, for God's sakes, for this stuff, right? If you can make it more efficient, that's a huge boon for them. So, I mean, if ARM can pull this off, it would be really, really interesting.
All right, big story. We'll keep watching. Thank you, Dan.
Taiwan Semiconductor announcing it expects its Q1 sales to come in at the low end of its forecasted range after $161 million in losses from a January earthquake that impacted production. TSMC upheld its full-year outlook, though. President Donald Trump has threatened tariffs as high as 100% on Taiwanese chip imports. Taking a look at shares here this morning, they are still holding on to gains of about 1.2%. The company said within its release, though, that there was no structural damage to their fabs, the water supply, power, workplace safety systems, operations still functioning normally. But what they said was a certain number of wafers were impacted and had to be scrapped due to the earthquake and aftershocks as well. As a result, the revenue forecast for the first quarter of 2025 now anticipated to be towards the lower end of the guidance range, $25 billion and $25.8 billion was that range.
Yeah, certainly. We are seeing, obviously, a little bit of clarity just in terms of the impact that those earthquakes is having on TSMC. And obviously, it wasn't just something that happened in January. Clearly, it's going to have a material impact here over the next several months. There's also the report out from Reuters this morning saying OpenAI is set to finalize the first custom chips design. I bring that up because they're expected to send the new chips for fabrication at TSMC. So again, another story that is moving the stock a little bit here this morning. But when you take a look at the earnings results and what we are getting there, taking a look at the forecast, they're planning to invest a record $42 billion this year in AI demand. Their major tech companies, including Microsoft, Alphabet, Meta, also announcing some of those significant AI investments last week. So again, when you take into account some of that initial hesitation or worry surrounding DeepSeek, very much seems to be in the rearview mirror, at least for now. And also, I think there's been this shift just in terms of how the industry and more broadly how Wall Street is looking at it, just in terms of more of that Main Street adoption, widespread adoption, and how ultimately it's going to turn into a larger driver here for the industry moving forward.
Yeah, TSMC shares still holding on to gains here pre-market.
Shares of Supermicro rising after the company gave a bullish long-term revenue outlook, easing some investor concerns, saying that it, quote, believes it will meet a NASDAQ deadline to file audited financial results. Still, though, the near-term forecast and reported results coming in just shy of some of those expectations. Let's bring in Sylvia Jablonski. She's Defiance ETS CEO and Chief Investment Officer. Sylvia, it's great to have you back here on Yahoo Finance. So let's talk about SMCI because since the last time we talked, it looks like at least things might be headed in the right direction for the company. I'm curious how you're thinking about this update here today.
Yes, good morning. Yeah, let's hope so. I think, the market liked what it heard with the stock. Initially, we saw the stock fall after the earnings announcement. They were kind of shy on revenue expectations and then shy on the 2025 outlook. But when we heard that potential, 40 billion going into 2026, I think that's really what perked up investors. And they have a unique story here, right? I mean, they pretty much provide data center servers, liquid cooling technology for some of the top data center AI companies like NVIDIA and AMD. And so, they have this key relationship with the leader of AI. And I think that, they have this unique product that essentially no one else on the market has. And so they're well positioned to be a top player as AI continues to grow. And with this company, as we know, it's just all about some of the accounting and reporting things that have spooked the market. But it seems like, if we get good news that they're coming out of that and projections for 2026 are good, it could be smooth sailing for Supermicro.
Does it seem like there's just too much of the moves around Supermicro that have been hinging upon will they or won't they file in time to make it an extremely viable business investment at this juncture?
Yeah, I think so. I think what holds investors for fully coming into the stock and, kind of like fully adopting their technological prowess and leadership in the AI space is just that, right? Because of the Hindenburg, kind of report that came out and what came after that. I think February 26th is going to be a key date. If we see that, they're able to file their updated statements and everything is sort of kosher there, I think that that's something that ends up being a tailwind for the stock, and it could potentially, climb higher. But the market still wants clarity on that, I think. And so, we need to see what happens in the next week or two.
Sylvia, is there still any sort of risk, or is there any risk that this could affect their relationship with NVIDIA?
Well, I think February 26th will be telling, right? I think if you get a situation where the audit and financial statements are not acceptable and it kind of comes off of the NASDAQ, I think NVIDIA would have to do their due diligence and kind of, weigh their options. I mean, the one good thing is that it seems as though they're a leader in a space that doesn't have as many, cooling technology server options as NVIDIA needs for their Blackwell chip. And so, I think a lot of it, again, is just making sure we just get clean reporting and that the market is comfortable with all of, kind of what the company is doing as a whole. Once we get past that hurdle, the technology and the growth story is certainly there.
What type of outlook do you need to hear from Supermicro even after they file with the NASDAQ and their kind of vision into the future about how they kind of sustain the business, but also the partnerships like Shauna was bringing up that are going to look to them to be able to deliver upon deadlines that they set forth?
Yeah, I think part of this will be, again, just kind of getting, past February 26th and having a steady run of clean reporting and filing on time and things like this. And then I think if we actually see those revenues start to bump up on the second half of the year, making it feasible that, we get that 2026 projection, I think that's something that will really, bode well for the stock and for the market. And then in terms of that stability being there, if you have a leader like NVIDIA in the space, you have to think that, and AMD, you have to think that all of the other chip providers will start to step in and perhaps utilize their services once they have a clean slate.
Sylvia Jablonski, we're going to be watching closely as they start
Thank
to
you.
file these reports. Appreciate it.
Supermicro Computer updating its second quarter guidance, now saying it sees adjusted earnings per share coming in between 58 and 60 cents. So look at the stock there, about 0.7% we're higher. Let's get to the numbers, Julie. So Q2 adjusted EPS, 58 to 60. They had seen 56 to 65. The street was looking for 64. The top line, they're saying Q2 net sales are calling for between 5.6 billion to 5.7 billion. They had seen between 5.5 and 6.1. And then looking out full year net sales, they're calling for between 23.5 to 25 billion. They had seen 26 to 30 billion, and the street now we're up nearly 1% here in the after hours.
Yeah, but to put that in perspective, the stock did a quick drop of something like 19%. After the headline started crossing on this, before this little bit of a turn positive. And as we know, Supermicro has been sort of a controversial stock. It's been quite a volatile stock. It first soared on last year on this outlook that it would be one of the beneficiaries of AI, but then came down pretty sharply. There were questions about its accounting. So that's why we're getting this, business update that is not a full earnings report, that is, and we've been waiting for sort of the complete financials from this company for a little while here.
It's a remarkable story because at one point, it was seen as a true AI darling. I mean, this stock was at 123. That was the all-time high here. But as you know, then we had just a very turbulent year. Remember, in December, they were, talking about they would replace their legal and financial leadership. There was the former.
They had to get an auditor, a new auditor.
Employee alleges attempts to overstate revenue. But then you did have some recent news when they said, they were ready to ship these new AI data center systems with NVIDIA's latest and greatest chips that got themselves a pop. So to your point, it's been a roller coaster.
It has. So we'll see where that roller coaster ends up
We shall.
tomorrow. It might not stay up. We'll see. We'll see what happens.
A number of chip makers are starting off the trading day in the green here this morning, just 2 weeks after a low-cost AI model from Chinese startup DeepSeek did roil stocks with fears of overblown AI spend. Joining us now to break it all down and what this ultimately means for your portfolio, we want to bring in Ivana Dalevska. She's a Spear Invest founder and chief investment officer. Ivana, it's great to have you back here on Yahoo Finance. So talk to us just about, here we are coming off a number of the reports that we got from some of the Mag 7 companies, very much doubling down on their plans to spend big on AI. The market very much seems to be not taking too much issue with that. So what does that signal in terms of the growth opportunity that's ahead?
Well, Shana, thanks for having me. What we saw last week from the hyperscalers in terms of CapEx is some really blowout numbers that the market wasn't expecting before. So going into this year, the market was expecting about 20% growth after a very strong year last year, and now that's looking closer to 40+%, which is pretty significant. And really, if you look at the companies that are going to be affected, it's really a handful, up to 10 companies, right, that are benefiting from this CapEx spend. So it's going to be a meaningful increase to earnings estimates as we look to the rest of this year.
What do you think it ultimately means for NVIDIA? It was a stock that was hit extremely hard on the heels of the DeepSeek developments, and then here we are 2 weeks later, and it's a very different narrative shaping that stock.
Well, first of all, we think the DeepSeek announcement in itself was a pretty positive development for NVIDIA. So the market completely misinterpreted this to begin with. I think it may be negative for some of the other companies in the value chain, like open source models, but for companies that are making hardware, more innovation is always by definition better. So we think that was an amazing entry point to pick up some of these hardware stocks. And then on the flip side, you have now these announcements in terms of CapEx and companies doubling down and growing. We think it's a really good setup for NVIDIA specifically and broadly the hardware value chain.
So the recent selling activity, I guess, would you be a buyer then still at these levels?
Absolutely, and not just NVIDIA. I think across the value chain, you saw energy stocks like power generation stocks go down 20% on the announcement. You saw networking plays as well go down 20+% on the announcement. So we're finding opportunities across the board.
Do you think DeepSeek, the worry very much was overblown, to put it in your words, but in terms of a worry of the past, I guess, how much is the market still grappling with maybe the fallout when it comes to some of those names that you mentioned that might be hit more significantly versus the fact that it will also act as this catalyst, more broadly speaking, for the AI adoption trade?
Well, I think it's going to be interesting to see. I think as we go forward this year, you're going to see companies like Cloudflare we saw last week, where they said, look, cheap models are actually very good for us, right? So we're able to offer these cheap models to our customers, and they can build applications on top of them. So as you see more of this come to market and more companies speak about the positive effect of DeepSeek rather than the negative, I think you're going to start seeing valuation reflect that narrative.
One of the themes that we've been talking to a number of guests here, especially over the last 2 weeks, is this theme around AI networks and how this is the next opportunity when you're looking to capitalize on that next phase of growth within the AI spend. Arista Networks, I believe, is one of the stocks that you like within that space. Why are they so well positioned compared to some of the others?
Well, what we're going to see going forward is that a lot of the innovation over the past 2 years came from the actual chip. So NVIDIA brought to market differentiated chips that are able to do something that prior generations weren't able to do before. As we look forward, a lot of the improvement will come from how you connect these chips together. And this is where networking comes in place. So companies like Arista Networks is really well positioned to benefit because they've been on the forefront of innovation on the networking side. So as we see this broaden out to the rest of the value chain, I think networking is one of the more interesting areas. Memory is another area. Those companies are a little more different business models where they haven't historically generated returns on invested capital the same way that Arista has. So I think there is a broad set of opportunities. Networking is one of the more interesting ones.
Nirvana, there was a headline out this morning. It was an exclusive report from Reuters talking about OpenAI set to finalize their first custom chip design this year. Of course, that would reduce their reliance on NVIDIA. I'm curious, what do you see as the broader implications of that?
So custom chips is one of the more interesting investment opportunities for the next 2 to 3 years. We're seeing companies like Amazon come up with their own chip. Microsoft will be coming out next year. So all of these companies are coming up with their own in-house chips. What I would say is that NVIDIA, what they offer is not only the chip side, but frameworks and software on top of the chip. So if you're a tech giant, you may be able to use your own chip. If you're anybody else that could benefit from these frameworks, like anybody developing robotics applications, medical applications, basically anywhere where you need to use some of the software that is pre-built, you are going to be more inclined to use NVIDIA chips. So it's two different markets. I think there is upside for both. We like Marvell on the custom chip side. They help companies like Amazon and Microsoft bring chips to market. Broadcom is another one. We disclose all of our holdings on our website, by the way, so for your viewers' knowledge. But basically, the custom chip opportunities is one of the more interesting ones going into the next 2 to 3 years.
And Ivana, real quick before I let you go, just the rhetoric coming out of the White House, the tit for tat that we've already started to see play out between the U.S. and China. Obviously, tech very much, chip makers front and center in that. How big of a risk do you see that posing, more broadly speaking, at least in the short term?
Well, I think in the short term, we expect a lot of volatility, but in terms of actual risk is pretty limited. And this is because really this upside is driven by demand. So we see demand in the US, we see demand globally. So as long as there is demand, there is going to be upside for these stocks. And really these headlines will be more of a volatility causers rather than actual fundamental downside. Long term, if NVIDIA is not able to sell to the Chinese market, we think that that is a negative, right? So that will cap how big the ultimate opportunity is. But in the short term, there is a lot of demand, and I think even without the Chinese markets, there is more demand than supply.
What does that
available.
longer term downside risk then look like?
Well, it's really more that they will be shut down of a even bigger opportunity that they could have had, let's say, 5 years plus out, but that's still to be developed, right? Like if lower end chips are allowed in China and NVIDIA can access that market that way, there would be still some of that potential left for the stock.
Okay. Ivana, thanks so much.